Are you still chasing trades with 3, 4, or 5 indicators on your charts? If you are a trader trying to make sense of the Nasdaq market, then you need to listen up. I will teach you a simple strategy with 0 indicators, and yet it still works very profitably. I will show you its simple logic, how to automate its building process, and how to build a portfolio out of it. I am going to cover 3 things in this video: the pattern, why it works on the Nasdaq market, and how to automate the building process on StrategyQuant X. Number 1 is the pattern. It is ridiculously simple. We will go long when the close of today's bar is higher than the close of yesterday's bar. That's it. We enter next day at market. There is only a single condition in this strategy. Now, to build a variation of this strategy, I will show you another way on how to enter the market. So why this pattern works on the Nasdaq market? Nasdaq market loves momentum. I mean, yes, it still works with mean reversion because it's highly correlated with the S&P 500 index, but it just loves momentum. And in fact, any momentum signal will work. But because the strategy is built with no indicators, I am using this simple pattern, which is the close higher than the previous close. And here is why most traders fail at this. First, they don't believe that simple strategies works, or they try momentum on the wrong market. For example, they try momentum on crude oil or S&P 500, and of course, it's going to fail, and they think that's it, this strategy doesn't work. But the trick is not to trade momentum on its own, but to match it to the right market. And that's why it's going to work on the Nasdaq. The idea for this video came from a comment from a regular viewer of the channel and asked me to build a breakout strategy, because usually I build mean reversion strategies as they tend to do very well with the profit percent. So here we are in StrategyQuant X. I am in Algo wizard. And as promised, the strategy entry is a simple line. The close of today's bar is higher than the close of yesterday's bar. If that is true, we enter long with a market order. And our exit is fixed number of bars. To set up the market, we are using the Nasdaq daily bars. So this is not the 24-hour session, this is the daily session. Data from 2006 till May 2025, and I'm using TradeStation engine with a fixed single contract. So if we run the test, we're making $222,000, 677 trades with an average of $329. The win rate, 60%, is extremely good for a momentum strategy. Since 2007, we have 6 losing years and 13 profitable years. This is the equity chart with a huge drawdown in 2008. This is the subprime crisis. Again, we have a big drawdown in COVID 2020. And recently, we have a big drawdown in 2025. Now, we can still enhance the strategy by changing the way we enter the market. So currently, when the close is higher than the previous close, we just enter the next day. We can actually use a breakout method, which is to add a little bit of distance to the close so we don't enter all trades. So here is the other method. Again, when the close of today's bar is higher than the close of yesterday's bar, we will buy tomorrow, but this time we are adding a distance. This distance is a multiple of the ATR. So as you can see here, I have the ATR of 10 bars times 0.3. So we are entering at a stop. So the price has to hit our stop in order for us to enter. Everything else is the same. And if we run this strategy, we can see we are making less money. Here is the same strategy with 0.1 multiplier of ATR. Now, both strategies can be optimized to produce different variations and probably better strategies. We have for the breakout, the ATR look back and the ATR multiplier. And for both strategies, we also have the exit number of bars. So we can convert both strategies to a template in order to do that. So if you go to settings, advanced, switch on template, we can add here a random condition. This will be our strategy filter. And then in the long entry, we go to exit after bars, click on the three dots, generate randomly, and let's exit between 1 and 15 bars in step of 1. So now this is our template. We will have different variations because we will exit at different number of bars. Plus we have a filter that could be volume, volatility, direction, pattern, anything you can think of. So now if we go to builder and what to build, we select strategy from a template and we will pick the template we just built. And we only need to set the number of conditions. So I only want one strategy filter. Nothing else is picked. And then we go to building blocks and we select everything. So 521 blocks picked here, 102 here, 26. And we have exit after number of bars, entering at market. Now in the rankings, I picked something that is better than the strategy that we generated. We have higher profit factor, higher return to drawdown, and lower number of trades just to make sure that our filter is working. Let's set this to 250 and let's start our generation. Okay, so we are almost there. I'm going to stop it. And let's sort by return to drawdown. And this is the best strategy in terms of return to drawdown. And this looks really, really good. And if we look at the source code, so we're exiting after 6 bars. And our entry, of course, close higher than the previous close. And here we have statOasis direction is rising. So this is my proprietary indicator. And this one is exiting after 10 bars. And the filter is the open is greater than SMMA. This is a smooth moving average. So it's very simple. Again, this is the direction, which of course is the same as my statOasis direction filter. Now I'm going to select all these. Let's rename them. So this is higher close. Okay, so now I loaded the breakout template, which is this one, the one that has the ATR. Of course, we randomized look back, the multiplier, and the exit after number of bars. And this is the strategy. So we have a random condition with the entry, and the long entry now, it's a stop, and we have our close plus ATR multiplied by a multiple. So we randomize the multiple, we randomize the look back, and we randomize the exit after number of bars. So going back to builder, and now we will build this template, keeping everything else is the same. So same data, same everything. Okay, so we are at 500. So sorting by return to drawdown, we see now this breakout strategy is slightly better than the close. So I mean, we're building 250 strategies. We cannot get a definitive answer. So looking at this strategy, well, we're definitely making less trades. So this one is exiting after 13 bars, and the ATR look back is 10, and the multiplier is 0.3. And we have a filter, which is the open crosses above the close of 2 bars ago. And if we look at the equity chart, this is how it looks like. Now I can also change this strategy to a weekly strategy. So we keep everything the same. The entries close higher than the previous close, and we enter at market. We exit after 4 bars. But now our data, we switch it to weekly. And if we run the strategy, again, the strategy is profitable. Of course, we have a huge drawdown here. But now I can use the same template and just build a weekly strategy. So let's go back here. Let's sort. We will rename these guys to breakout. So let's add a breakout to these just to distinguish them. And now let's go back here and we go to data, and let's select, instead of day, we select week. So it's the same template. We are just now going to build on weekly. Of course, we should have a lower number of trades. Okay, so we build and let's do return to drawdown ratio. And this is weekly. And again, we are making higher return to drawdown. Let's look at this. It's almost doing nothing here. And then from 2018 and above, we are making really good returns. And if we look at the code, we see again, we are using the ATR. And look at this, exit after number of bars is 1. Because it's weekly, it found that, of course, exiting after 1 week is better than waiting 4 weeks. So again, I will rename this to weekly breakout. And finally, I will do the buying at market, but on the weekly data. Okay, now it's done. And again, we sort by return to drawdown. So here is one weekly strategy that is using the close higher than the previous close. So it's exiting after 2 weeks and basically close higher than the previous close with the Heiken Ashi is rising for 2 bars. So within minutes, you can get 1,000 strategies based on the same pattern. I mean, we didn't do anything to the pattern. We can go and do other stuff, but really no stop loss, no profit target, just exit after number of bars and trying to enhance our return to drawdown with a filter. Now we have about 250 strategies from each category. And now comes the fun part where we can mix some of these strategies to come up with a portfolio that is better than a single strategy. So if you click on all strategies and go to portfolio, move to portfolio master. Are you sure? Yes. Then we go to portfolio master and we have here all our strategies. Now we go to full setting. Let's put this down. Here are some portfolios generated. We're making about $1 million. Of course, we are combining the capital. So this is one of the portfolios. And you can see we have weekly breakout, breakout, weekly breakout, weekly breakout, weekly higher close, and another weekly breakout. And trade analysis, we are doing very well lately. 2011 was a losing year. 2008 was a losing year also. We can put the correlation really high because we're actually not building a portfolio of strategies. What I am trying to do here is instead of trading a single strategy, I can use the micro futures and trade a number of strategies as a single strategy. That way I can still get diversification even though they are highly correlated. If you understand your market, you don't need complexity. Simple should work and produce really good profits. Matching momentum to Nasdaq market is a no-brainer. If you like this video, then you will love the next one.